in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn is a financial advisor with Hackett Financial in Boca Raton, Florida. And this edition of the Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom, delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. And based on the weather that you've had, you might need a pair of those Dryshod boots down where you're at right now. You've got more water you know what to do with.
We certainly could use a few things that have to do with too much water. That's for sure.
Absolutely.
Noah built an ark yesterday, so we're good.
You're good then, right? Yeah. There you go. There you go. All right, man. So a lot of stuff happened this week. We've got that. We're seeing the continued rise of the price of oil. We're seeing the continued rise of gasoline futures. We're seeing the amount of stocks go down in gasoline and as well as ethanol. And corn price is at that kind of like we talked about last week. It's still doing the same thing. You know, it gets scared. It scares itself that it's going up, so it's got to run backwards for about a couple cents. Then it runs up a couple cents, and it kind of goes back and forth. So we're at that kind of that medium choppiness there. That we're kind of poised to do something here, right? So everyone's going to just see who's the first person that's going to be brave enough to jump in there and go. As you take a look at the stuff from the government as far as the C.A.R.E.S package goes and the CCC and what they had kind of come out, I don't know how much help that's going to be for folks. To me, it just seems like there's they kind of priced it around things that have already happened and have taken away the ability for the producer to either go back in 2019 and pull stuff out. And I guess they can as long as they don't have anything in the bin, right? And there's no real forward-looking support in any of those packages. So I guess as you take a look at, let's just start with oil first. Take a look at oil and see what we got going there. As you take a look at the landscape of energy right now, what's your thoughts? And I guess what do you think you see happening there?
Well, the last 2 weeks, Casey, we've talked about this concept that the oil is going to continue to work higher, that the demand for gasoline is going to start to continue to move higher, that the ethanol stocks would continue to move lower at a time where ethanol production is very low, and that the bears in the corn market, the bears in the ethanol industry suggesting that there's no hope for the rest of the year, they're just, I felt, and I think on your program you felt that that was not likely going to be the base case. The base case was that we were going to see some very significant improvement in demand, and that the ethanol producers would start to chop through corn again at a much higher rate than everyone's expecting, which would then begin the process of chopping down these ending stocks that the balance sheets say are there, but they're never really there exactly. That's just what the balance sheet says. The spreadsheets are saying, and we're starting to see that happen. I mean, it's clear that we have barely just started to reopen the U.S. economy, and already we're seeing parabolic increases in demand for gasoline. One could argue, and we would argue, that given the cooping up of America and the fact that probably everyone's going to still be not comfortable getting on a plane, and probably they're going to want to get on the road. They're going to want to get in the car with the family. They want to go to a park, go to a beach, go somewhere in the car in a place they can control, see other family members, but just get out on the road. We think we could actually have a record driving season because of all this pent-up demand for gasoline. Maybe not for diesel, but for gasoline. And, of course, the only thing that matters to ethanol is the gasoline demand. That's all we care about. So what happens if we actually have record demand for gasoline? Gasoline prices continue to head higher, and the ethanol price continues to head higher, and we start getting big margins and we fire ethanol back up to normal, what happens to the bear case? I'm not sure, but I don't think 320 corn and sub $3 cash is where we're going to be. Remember, the whole breakdown in the corn market from 340 to 360, which is where we had been for years, was the fact that ethanol caved in, energy caved in, and ethanol was down for the rest of the year. If we take that out, everything else being equal, we have a pretty substantial rally in our hands in the corn market, and we feel this corn market is so quiet, the volatility is so small that it's like two people with a gun at each other's head, and someone's going to shoot first. And we think the price of corn is going to break out to the upside and force all those short speculators who thought their yearly rate of return was going to be made on shorting corn is now wrong. And so we're looking forward to seeing that happen here over the next 30, 45 days. It's inconceivable to us that these trends are going to continue for much longer without the corn price responding to the upside.
Yep. Yeah, ethanol plants are slowly coming back online across the country. Some of the biggest ones that have been shut down have fired back up. Not all the gigantic ones have come back online, but the smaller ones seem to be the first to come back into the play, which makes sense. I mean, they don't do the output that these monsters do, so I kind of understand their rate of return and costs and stuff are a little bit lower than the average giant is. So I'm with you, man. You texted me yesterday a nice graphic that showed the like you're talking about, the parabolic rise of gasoline, what that looks like, and it is all but straight up a straight line. You know what I mean? It's very much right there, and every week has gotten exponentially bigger than the week before. So it's you're seeing that climb. This Memorial Day weekend coming up too, right? So, and we're talking about people that have been in their house for 2 weeks, first weekend of summer, or 2 weeks, 2 months, and they're talking about the first weekend of summer here. I feel like there's going to be a lot of people that don't go someplace crazy, but they're going to go. If you're close to the mountains, or if you're close to the beach, or if you're just close to something, you know what I mean? Close to something, you're gonna go, and it's just because it's going to be a nice weekend. It's going to be, weather's nice. I mean, you're going to have a lot of opportunity to get out and go, and I think there's, for the most part, unless you live in like Illinois or something, for the most part, it's things have opened back up. Texas is opening back up. Nebraska is opening back up, slow but sure. I think most states have a
Florida is kind of open. I mean, we're open down here now, and traffic is crazy again. So corn cash base is starting to rise. Casey, it's another metric to watch. Because remember, like, the cash basis for corn crashed when ethanol crashed, and now it's starting to rise again. So, let's be clear. This doesn't mean $6 corn, but a normalization to something more reasonable, I think, is in order, and that means going from where we are now, back in that mid-upper $3 level at least, seems to me where we're heading, and that is, from where we are. I mean, that's still going to be. We're talking about something like a 20 to 30% move, which is a lot right now, and that will do more for farmers than any CCC, PPP, TTT, AAA program that's out there.
Right, so. Absolutely. Yeah, no doubt about it. That's a true statement. Yeah. So on that topic, let's jump over and talk about that in a minute. So was that Tuesday that they rolled that out? So Tuesday they came out with the stimulus package for agriculture and what that looks like, and I don't know if the people that put this stuff together don't understand how farming operates and when and what that looks like, and what, or they even pay attention to what's going on around them, or if they're just kind of rubber stamping some stuff to make it look like they're trying to do something, but they didn't really give them a lot of help. I mean, if the coronavirus happened in June of last year, it'd have been great, right? It'd have been a great thing for them. But kind of paraphrasing here a little bit, basically the crop bushels that you have, if you have anything in storage at all, that trumps what you did in 2019. So if you have one bushel in storage, that's what they're going to be, your baseline is going to be based off of, not what you did in 2019. So, anyone that has a large amount of grain in their bin right now, you're the luckiest person on the planet, because you had an opportunity to sell that corn for about $4.50 in December. If you look at December contracts that were happening in June and July last year, which I've got to believe that there's a fair amount of people that took advantage of that.
I sure hope so. We were certainly pounding the table to sell, I'll tell you that.
Yeah, and so I'm pretty certain that there's not a lot of guys that have a ton of grain in the bin, and I'm just judging that by, I don't have a pile of corn anywhere where I'm at. You know what I mean? Any eastern Colorado, western Nebraska, even as I go into eastern Nebraska, I don't see the piles of corn that I saw 3 years ago, right? So that tells me that there's not a lot of corn laying around. Most of it got sold off and what have you. So the cattle side of it, the pressure that they're going to be relieved is basically what they sold from January to March. But the bad thing about this, there's nothing moving forward. All right, there's no, what do forward contracts look like in June, July, August, going into the fall? What does that look like? So, I mean, who knows? They could come out with a stimulus package part 2 like they've done. I think we're on PPP level 7 now. I don't think we've gone through that about 10 different times. So, I guess as you take a look at that kind of package that came out, I guess what are your thoughts? And I mean, how are you helping your customers with that plan that they're working with, and what they're and understanding what to do with what they've got going on?
Well, I mean, I think first of all, from a government perspective, I think their feeling is they already handed out a lot of money last year as a result of trade war problems, and I think that so I think that they're not. I think they're not wanting to hand out any more money than they have to, because they feel they've already given a lot of assistance to agriculture. And I also believe the government is in a period where they're trying to do just enough for the U.S. economy to reopen, and hoping that takes care of a lot of the problems later on in the year, than trying to commit to long-term capital that may or may not be needed. So, as you just said, if for some reason 3 months from now we're still not in a good situation, they'll just come up with PPP 8 and have another stopgap measure just to cover that issue. I think they're in the mode of, let's just solve the problem for now, and let's buy time for a vaccine, buy time for the economy to open up, just buy time so that things can get better, but better for worse. I think that's the mode that they are in. In terms of the producer, obviously they should do whatever they can legally, of course, to bring as much money in as they can, because it's their business, it's their livelihood, and quite frankly, we need them to be producing food, because if we're correct about what the weather looks like in 21-22, La Nina, grand soil cycle minimum, we're going to need every single producer to produce food to get us through that production shortfall that's coming, on top of all the dysfunction going on with the virus. So, you can't get blood from a stone, but you get as much as you can. So, for example, I'm president of my church, and the churches were allowed to participate in part of this PPP program, and we were just we closed down, and we've been impaired, and so we're doing everything we can so that we can get to the other side. And like everybody else, it's not enough. It's not perfect. We wish it was more, but we're grateful for whatever assistance we get.
Mm-hmm. Yeah, I guess as you take a look at the landscape across other items too. So if you take a look at like sugar, for example, sugar had a chance to really take off and run. It fell just like everybody else did, but it is as things start to open back up, and you start to see more and more of these restaurants and stuff like that start to open up, and they start to have the demand for sugar. We're starting to see a climb there in sugar. So talk about sugar a little bit and what you see happening there.
Well, there's two issues. The U.S. industry is all about sugar demand for U.S. consumer consumption. The global price, which is the futures market is more based upon, is about, does Brazil make ethanol, or does Brazil make refined sugar? So we went from the Brazilians diverting record amounts of sugar cane to make an ethanol, to producing the smallest amount of ethanol they've produced in years, overnight. So with energy going up, we talked about this with the corn market, with ethanol prices going up, clearly, if the Brazilians start to shift back to making more ethanol versus refined sugar, then the sugar price will start to rebound. It is rebounding, by the way. We actually got slightly below 10 cents, not just a few weeks back. Now we're pushing over 11 cents. It's not 15 cents where we were, but we're already starting to work our way back up based on this idea that ethanol in Brazil is coming back. On the other point, and it's something we talked about in our report this week, we've been monitoring the desert locust infestation in northwest India to see if that infestation would come in the month of May. It has come in the month of May. The work that we did said that if the desert locust lodges itself into the northwest part of India by May, then the spread will continue into the northern half of the key ag belt over the summer months. And so we're deeply concerned. Of course, that's where the sugar is grown in India. And India is a huge exporter of sugar. It has a huge impact on how sugar is priced. So if we see the desert locust continue to become a problem and we have another really, really short crop like we did last year, the sugar market could be on the mend for a whole different reason than just the energy reason. So, we kind of like the sugar market here. We think there's a lot of reasons for it to go higher, and we think most of the bear cases are even priced in. So.
Okay, so on Brazil, I was going to hit on that. The amount of ethanol that Brazil quit producing because of obviously the price of energy. Start looking at oil and everything like that. So now they're going to start aging back into there, and there's going to be some opportunity there. The other thing in Brazil, and we talked about this last time, is that they're in the kind of the peak cycle for coronavirus cases to start popping up, and they still haven't done anything to like the rest of the world has as far as stopping the spread or shutting things down or limiting distance between people or whatever it is they come up with. They've done nothing. So I've been reading those articles throughout the day when I got a minute about what's happening in Brazil. I still think there's going to be a big issue there. If people start getting sick and they can't export or they can't produce the crop or they can't, the logistics of moving the crop around are going to be there. I still feel like they are setting themselves up for a disaster. What are your thoughts on that? And have you seen anything different than what I just laid out in Brazil as far as the coronavirus goes?
No, it's another one of our bullish rogue waves. We talk about various rogue waves that could take place this summer. This is one of them. The desert locust is another one. The fall armyworm in China is another one. But clearly, it's hard for us to imagine that a country, by the way, that likes to strike anyway. They love to strike. They like to cause, that in this case, they already, from what we understand, and from my context, their hospital system's already overrun. They're already, from what I read, preparing mass burials. I mean, it's really, really bad. And we're not even nowhere near the peak of the situation down there. They're moving into these ideal weather conditions for community spread of the virus. So it's really hard for us to imagine that they're going to be able to operate business as usual logistically with getting product from the farm to the port to the destination without disruption. We just think it's highly unlikely that we're not going to have some issues with that. And that means things like coffee, things like sugar, things like corn, things like soybeans, that they export a tremendous amount of, are going to, be concerned. And when buyers are concerned that maybe one of the largest exporters of agriculture in the world may not be readily available, there's only one other country I'm aware of that could potentially, at least for a little while, provide them some supplies, and that's the good old U.S. of A. So that is a potential for some much, much better pricing and for some strong opportunities for our producers to get a price that makes all their hardship pay off here. And so I agree with you, Casey. I think it's a ticking time bomb, and the markets are completely complacent about this. And I think we could just wake up one day and all of a sudden see corn up 10, 15 cents out of nowhere because everyone realizes this is a problem now. It can happen just like that.
Yep. Okay, so let's talk about on the export front here. Let's talk about China for a minute. So there is China keeps banging, or sorry, Donald Trump keeps banging on China about the coronavirus thing, and we should refigure the phase one portion of this because of that. And if you don't start picking up your end of the bargain, we're going to go back to tariffs, and which would just be nothing but good stuff for the world if that happened. I guess as you take a look at what's going on, I mean, there is a report out this morning that shows that a shipment of U.S. ethanol, refined ethanol, has made its way to China. They're buying some ethanol from us, so that's a good sign. It is Thursday. We do have the export report coming out today, and I guess what are your thoughts there? I mean, the phase one thing to me, after I kind of get a chance to really dig into it and kind of look and see what's going on, not that I'm an expert by any means and all that, but there were never really a lot of teeth in there to really say, if you don't do this, this will happen. And there's a lot of ways that they kind of, if there's a reason for us not to be able to buy it, or if we can get it cheaper someplace else or something like, there's a million reasons why they shouldn't have to buy it from us. So, but that being said, we kind of are really the only game left in town. I mean, China or Brazil has kind of sold itself out of a lot of stuff. So I guess as you take a look and see what's happening with China and exports and stuff like that, this could be like a quote unquote save face for China on this deal, just because it's their only choice.
Well, right now with all the dysfunction, and by the way, it's not just Brazil. I mean, India is locked down and they're having all kinds of problems with getting product out. So I think the Chinese are sitting here going, we don't know who we can rely on for supplies. All we know is that we have a trade deal with the United States. They have lots of product. They're willing to sell. They can sell. And so I think they're going to buy a lot of product. It'll make Trump feel better. And it will kick the can down to the election. And then they'll take their cue from how things happen. But I think they'll buy enough product, Casey, not only because they just they don't want an altercation with Trump ahead of the election, because I think they think there's a good chance he may not get back in. But I think that they are hedging their bets. What if Brazil shut down for a month or two and they can't get corn or soybeans from them? I don't think they want to alienate the only country that can supply these products to them at a time that there's a lot of panic going on in China for supplies. So I think that there's a lot of talk. I always say, don't do what people say, do what they're actually doing. The Chinese are actually buying and increasing their purchases despite the back and forth talk, which I think is more about election year politics than it is anything else. So I'm actually optimistic we're going to get better and better numbers. And it'll be another reason why we could get some higher priced grain markets this summer, that they actually start picking up the pace. And maybe they ultimately won't get to the end game at the end of the phase one time frame, but I think they'll do enough over the summer months that it'll keep everything at bay for now.
Kind of looking at the export reports today, again, they aren't very optimistic. They're basically thinking about corn to be half of what it was last year. Well, not even half of what it was last year. Soybeans, kind of the same story. Wheat, they're expecting to be higher this week than it was last. So I guess as you take a look at the export report expectations and kind of what you've seen here, what are your thoughts on that? And I guess they seem awful bearish still, I guess.
Yeah, I continue to believe that the bears are overly bearish, too bearish on exports, too bearish on ethanol. And I think the summer months they're going to be much, much better. And I think they're too optimistic on production. I don't believe that. I know. At least for the corn market, the historical trend is always bet that the farmer will plant more corn acres when in doubt, and that's been a pretty good rule to follow for a long, long time. But if there was ever a year where that rule could actually be wrong, I think this could be the year that we actually plant less corn acres than the market thinks. Just because it's a money issue. It's a money issue. It's not a cheap crop to put in the ground. The banks are all over the farmers a lot about it. I just don't, and I don't see the application of inputs and fertilizers in the way that one would normally do. I think it's a money issue, and I don't think the corn crop's going to come through with the kind of blistering yields that we've been accustomed to, even if weather turns out to be sort of okay. I still think the market's overestimating our productive capabilities within the realm of basically the U.S. farmer being kind of in the worst financial condition they've been in really since the 1980s, from what I can see from the stress test that I see. So,
no, I'd agree with that. Well, good stuff, man. There's plenty of stuff going on. We could opine here for the next 24 hours and not repeat ourselves. So there's, I guess, as you take a look across the overall landscape, I guess what's your words of wisdom, I guess, for the rest of this week?
Keep the faith. Times will get better. Market's asleep. The bears have too much conviction, and I believe there will be an opportunity to sell a better price. I'm really comfortable and confident that we're going to get some better. There's numerous fuller surprises that could come to pass here, and it's hard for me to see pricing in a more bearish scenario than a pandemic, which we already have, in my opinion. So at this point, the risk reward for downside versus upside looks to me to be swayed or skewed to the upside. And so as depressed as I'm hearing my customers be, and as I'm hearing the media to be, I think there's lots of reason to be optimistic as we move into the summer months. And so keep the faith. That's the word for the Memorial Day weekend. Keep the faith. And
keeping the faith, the cattle market guys have done that. We've seen a jump up in the overall slaughter rate. Looks like pretty much they're still a ways off from where they've been at last year as far as that go, but we're starting to see prices tick up too. So until that gets full swing again, that's going to be a problem. But we're getting there slow but sure. So, like Shawn said, I'll just repeat it, man. Keep the faith, folks. We are strong, resilient people, and we're going to make our way out of this. We're going to be good to go. So, God bless the United States, and let's keep plugging forward, Shawn. So, Shawn, if folks want to reach out and talk to you and get some direction on what they got going on, what's the best way to do that?
The website is Hackett, Hackett, advisors.com. There's all kinds of things for them to listen, to watch, to read, to see if what we do might be of value to them.
If you get a chance to check that website out, do it. Go check out the website, look at those reports. Tons of information out there. Tons of information that's very detailed and very well organized. So it's well worth your time to check it out. Well, Shawn, thanks for being on the podcast, man.
Great to be here, Casey. Have a wonderful long weekend, and get on the road.
Yeah, get out and drive, folks. All right, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out at Facebook, Twitter, and Instagram for all the latest podcast drops as well as blog drops. I've got a blog coming up here. I'm going to post it today, and it'll be out for the world to read. Also, check out movingironllc.com for all the latest things Moving Iron. Also, check out the Moving Iron Summit that's out there as well, and that's coming up here September 1 through 3 in Nashville, Tennessee. So if you got some information on that, check out the website or send me an email at movingironpodcast@movingironpodcast.com. Also, make sure you check out the Global Ag Network and the folks out there and the great podcasters and what they've got going on their sites as well as their podcasts as well. So with that, I am Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find